In this video, traders, let's look at an easy way to prevent overtrading. Stay tuned. Hey guys, warm welcome to you. Alright, so overtrading can be a real nemesis, especially if you're day trading. And listen, I'm filming this literally the day after the election day. And you know, when you get volatility especially, you can get sucked into overtrading. So you've got to have ways to prevent yourself from overtrading. One of the things that we have to try to combat is this thing of overtrading. Markets moving here, it's this, that, the other, and you know, the lower the time frame you go, the more seductive the moves can tend to look. You see a 1 minute swinging up and down. You know, just look for example here, guys. I've got a FTSE 100 or a UK 100 in the C Trader spread betting account here. You know, if you go to a 1 minute, you know, you can see this swinging, and this is from the election perspective, but you can see it swinging up and down and left and right, and it just really wants to suck you into making a trade. But the prudent thing to do is to go, right, at what particular levels do I want to get involved? What particular levels will I want to get down to doing some business, and framing the market accordingly? Because your job as an intraday trader, as a day trader, is to identify levels where you believe you have an edge. And for most people, that is going to be at a key level, a fresh high, a fresh low, an open, a close, an opening period, a closing period, after something that's driving the market. Because retail traders, our job is really to look for that money flow, look for the order flow, look for the institutional money, and either ride it or wait until we sense some exhaustion. So, you know, a good example would be, you know, last night, in fact, I want to do, let's put up the US 30. So this is you can easily find it, guys, you know, by either selecting your chart here and putting it in your search symbol, or just selecting it from the watch down. Got a 15-minute chart here, but this is the perfect scenario. So, you know, yes, the volatility is quite wide. I mean, look, we're almost a 700 plus point range, which is a lot. And we know that's because of elections, but even if it's not, and even if it's a smaller range, the point is that, you know, for me, I now don't want to get involved in this. Now, earlier in the night, my framing was a little bit narrow. It was kind of around here and here, but now I'm looking at this and saying, even though the range is quite wide, I'm not interested in getting involved unless we start poking our head above that high or start poking our head above the low. Now, am I going to take a breakout? Am I going to take a fake out? You know, that's another decision to make, and preferably you've kind of got your thesis and idea before you get there. But the point of this video, guys, is, you know, we want to stop ourselves getting sucked into this chop. Now, are there setups within here? Yes, there may be, and this is why we go down to lower time frames. You might go down to a lower time frame and go, well, actually, my range doesn't have to be at the extreme. My range could be here. Let's say you're watching it in this kind of scenario here. You're like, oh, we've been in this range now for an hour or so. I want to only trade it when we break out of that range. That's fine, because you're on the lower time frames. The key is to identify the level that you want to do business on the lower time frame. Now, in that example, I still would like personally to break above the high, because that's when something's going to be interesting. That's when money is flowing in. That's when people are making a decision and are breaking it well above or below any level we've had in this particular scenario, the election, any level we've had based on any type of news that's come out. So that would be a really good place to have frame the trade. And like I said, it doesn't have to be election, guys. It just happens to be I'm filming this right now. It could be any normal type of day where you've had a drive and you're now oscillating and you're just framing the day, and all you're doing with this is you're saying to yourself, you know, the strategy comes after this, but all you're doing with this is saying to yourself, I am not going to get involved. I don't believe I have a decent edge that's worth me putting some capital at risk until these levels are broken. We could quite easily ping pong back and forth, and I don't believe that I can spot any type of setup that's worth me allocating capital to. And now, you may disagree with this, you might want it tighter, you might want it wider, but the point is you're doing this, and then you can be very easily disciplined and say, rather than I'm not going to take substandard trades and all these things that we talk about to try to stop over trading, you can simply say, I don't even want to look or take a trade unless we are above this high or below this low. And it's just a very simple thing to stick to then, because you can be watching it. If you want to kind of see other price actions trading and back and forth, fine, you can kind of enjoy watching the action because it is quite a volatile action in this particular example, or you walk away, but you still have that focus and saying, hey, I'm not going to get involved until this level's broken. So put your lines in. One way, if you are walking away, quite simply, when you're using the C-Trader platform, you can set an alert. And now listen, one thing to note is if you are going to trade at the level, you're going to fade it, you want to set your alert a little bit earlier. So kind of here, set your alert, put all your parameters in, hit create alert, fine, that will then alert you. And the same to the downside, so you hit this little bell icon and do it here. So just bring it in very slightly. If you have got that kind of range, bring it in very slightly if you're expecting to maybe want to be at the screens and to do something, a trade, or at least watch for a particular setup, a breakout, a pullback, a reversion, a price exhaustion, whatever it may be at the level. Set it a little bit before the finite high and low. Anyways, that's a really simple tip. I think it's a really useful tip. It's something that if you're struggling with overtrading, which many day traders specifically do, you can do this. Frame your range and go, hey, I don't even want to get involved unless the market is out of the range. Then it becomes a very easy thing to stick to, rather than what we often do is say, I don't want to take substandard trades, I don't want to chase trades, I don't want to take trades that aren't with my parameters or setups. You go, right, well, actually, I don't want to trade unless we are in an area that I think I've got a decent edge and it's worth risking some capital. Anyway, I'll see you in the next one.